Hey everybody, Smart Silver Stacker here. Hope you're doing well. What we have in front of us here is 15 1-ounce silver maple leaf coins. So 15 troy ounces of silver. And here we have a 20 franc gold coin from 1895. This is a French coin. It's got an angel and a little rooster on there. And this coin contains about 0.1867 troy ounces of gold. So what do these silver coins and this gold coin have to do with one another? Well, at today's prices and at today's gold to silver ratio, that's the ratio of the spot price of gold divided by the spot price of silver, this much silver is worth roughly the same amount as this much gold. If you go back in history, the historical record, for much of monetary history, this much gold would only buy you about this much silver, about 3 troy ounces. So what does this tell us? Well, it tells us that today, silver is incredibly undervalued. If this coin right here would only buy you 3 ounces of silver in the past, but today it will buy you 15, basically that means that silver is on sale. And if we go back to the historical record, we can get an idea of where silver could be headed from here. And in today's video, I am going to make the case for why silver could be headed as high as $200 an ounce. So let's get to it. Did you know that SD Bullion is giving away a 2023 box of Silver Eagle coins? Sign up today at sdbullion.com/sweepstakes. So to make this case for $200 silver, we're going to start off with a little bit of a history lesson today from this book, Globalizing Capital. And don't worry, this is going to be very short, but I am going to read you an excerpt from this book by Barry Eichengreen. And I have a passage marked off here from chapter 2 of this book that I'll go ahead and read to you. The gold standard evolved out of the variety of commodity money standards that emerged before the development of paper money and fractional reserve banking. Its development was one of the great monetary accidents of modern times. It owed much to Great Britain's accidental adoption of a de facto gold standard in 1717, when Sir Isaac Newton, as master of the mint, set too low a gold price for silver, inadvertently causing all but very worn and clipped silver coin to disappear from circulation. With Britain's Industrial Revolution and its emergence in the 19th century as the world's leading financial and commercial power, Britain's monetary practices became an increasingly logical and attractive alternative to silver-based money for countries seeking to trade with and borrow from the British Isles. And as we know, the British Empire was the largest in the world at that time, one of the leading world powers, and so when they adopt a gold standard, that means a lot of other powers do as well, and that is ultimately what we saw. We saw the demonetization of silver in the 19th century following the British de facto adoption of a gold standard. That's the origin of the global gold standard. And before that occurred, back to the book here, just one other quick passage. Silver was the dominant money throughout medieval times and into the modern era. Other metals were too heavy, such as copper, or too light, such as gold, when cast into coins of a value convenient for transactions. And so if you've ever wondered how we got on the gold standard in the first place, that's it. It was Isaac Newton's fault as the individual setting the exchange rate between gold and silver at the British Mint. But what does any of this have to do with $200 silver? Well, I mentioned that gold to silver ratio earlier, and I want to take a look at the very long-term chart of the gold to silver ratio. So this is from longtermtrends.net, and they have this chart that goes back all the way until 1693. And remember, this is a chart of the ratio of the price of silver relative to the price of gold. Basically, how much silver can you buy for your gold? And remember, today, for this little gold coin, you can buy 15 ounces or so of silver, but back historically, you could only buy about 3. And you'll notice on this chart that starting in 1693, for hundreds of years, the gold to silver ratio was constrained in a range between 14 and 16. So, let's just call it 15 for a nice average. And the reason for this was because these mints and these governments, they were artificially pegging the metals to one another as they ran these bimetallic standards. Even in the US, we did this in the Coinage Act of 1792 when the dollar was defined as a measured weight of gold and also as a measured weight of silver. That established a ratio similar to the one you're looking at this chart. But then you'll notice that in the 19th century, silver was demonetized for the reason that we discussed earlier, and it began trading freely in the free market, and you can see the ratio went way up. And there were some other factors that played into that as well. There was the demonetization of silver. There were also some very large silver discoveries, which led to a decline in the price of silver. The Comstock lode was found. And so the world supply of silver increased. It no longer had the monetary demand. Although, coins were still being minted in silver, the dollar was defined as a unit of gold. I believe that was the crime of 1873. You can look that up if you're interested to learn more about that. But I want to get into setting some price targets using historical numbers for silver. And to do that, we're going to zoom into this more recent chart of the gold to silver ratio. You can see on this chart that there were several times when there was a big dip in the gold to silver ratio. So basically when that happens, when you see it come back down, this gold to silver ratio, it means that silver is getting more expensive relative to gold. And this is typically the type of behavior that we'll see in big precious metals bull markets. And you can see on this chart 3 times that we had really big dips. One in 1968, gold to silver ratio dipped down very close to the historical level, just under 16. In 1980, it also dipped down to 16. And then more recently, in 2011, when we had that bull market in the metals, it dipped down as low as around 31. Now, I want to take a look at this 1980 date here real quick and take a look at what some of the highs for gold and silver were there, because they can kind of inform setting our price targets for the future. It gives us an idea of how high the metals have gotten in the past, how high they might get in the future. Now, it's tricky when you're measuring these prices in dollars because we know the dollar is constantly being devalued by inflation. So one thing we need to do is we need to adjust the prices for inflation. Now, the all-time highs in 1980 for gold and silver, for gold it was $850. Gold closed that high on January 21st, 1980, and for silver it was January 18th, 1980, when silver closed at $49.45. And silver actually hit a little over $50 in intraday trading in January as well, but we can just go with these numbers. Let's call the all-time high $50 just for a nice round number. Now, if we adjust this for inflation, you can see that this is according to the Bureau of Labor Statistics' own CPI calculator. So these are the official numbers. That $850 high for gold from 1980, from January of 1980, in today's dollars would be about $3,314. And then for silver, the $50 high comes out to about $195 if we adjust that for inflation. Now, these inflation-adjusted all-time highs, they probably understate how high the price of gold and silver would be if we had a similar bull market like what we had in 1980. And I know everybody's going to say the Hunt brothers for silver, but hey, they weren't manipulating the gold price, and the gold price also hit a very high level there. Again, inflation adjusted, $3,300, $3,300 plus. So, there was a lot more in 1980 going on than just the Hunt brothers. But the point here is that these prices are, a conservative estimate. But let's say that gold were to reapproach this all-time high, and it's kind of on the way. I mean, if you look at what's been going on in gold lately, it's had a very good couple of months. It's a little down today. By the way, probably a good day to do some stacking. I like to stack when the price is pulling back like it is today. We're back under $2,000. Silver's, I think, around 23 and change, so probably a good time to pick up some physical metal while silver is so cheap. But if we got gold going back up to $3,300, let's say, and we were to apply simply that historical ratio of 15, that would give us a silver price of about $220. So we know that, just taking the previous high from silver from modern history from 1980, just that for inflation, we get a number of around 195 bucks. If we apply the historical gold to silver ratio to gold's all-time high, that would give us a silver price target of about $220. Now, this may seem a bit pie in the sky to everybody watching, but remember, this is just based on historical data. This is not based on, flights of fancy. Again, I know everybody likes to pick on the 1980 data because of the Hunt brothers, but the Hunt brothers just show you what can happen in a small market like silver if a lot of people begin buying it up. And that was, a couple of wealthy individuals doing that. But we've also had, don't forget, the silver squeeze movement over the past couple of years. I mean, it could very well just be retail investors squeezing the silver market. It doesn't necessarily have to be an individual or a group of wealthy investors driving that. Retail demand could drive a very similar squeeze. And again, historically, this would not be unheard of for the gold and silver prices to get to these levels. And I want to go over a few other reasons why we may see this bull run in the price of both gold and silver. I mean, one thing that we've got going on, we have the BRICS currency maybe getting revealed. I know I'm kind of going diverging from the historical data here, but this is more current events. The BRICS nations have announced they're going to begin working on their own currency at their August meeting this year. That's what Sergei Lavrov, the Russian foreign minister, has told us. And one of the proposed ideas here is that this may be based on gold, or it could be based on a basket of currencies. So there is a real possibility that silver could be included in that, and we could see the world heading back to silver as money. And again, this may seem unusual to those of us alive today because we've never seen this, but remember, for most of modern history and history leading up to this time, silver was predominantly the money used by humans. The switch over to gold was a bit of an accident. We can thank Isaac Newton for that. And for practical purposes, silver really is the ideal currency of all the precious metals. It's kind of just right. It's like that Goldilocks zone. Copper's too heavy, gold's too light, silver is just right. So we've got that going on. We also have rampant inflation. I don't think I need to say much more about that. According to the most recent CPI, inflation is still close to 5% on an annual basis, just under 5%. And this is likely to be a persistent problem. And a lot of that has to do with the ongoing debt crisis. So it was just reported recently, the New York Fed came out with their consumer debt data. We've now hit $17 trillion in consumer debt in the US. Think about that for a minute. That's a record high. And a lot of this is because consumers are being squeezed by inflation and they are paying for essentials with credit cards, with consumer debt, and this is not sustainable. And it's the same across the board. You've got $31.7 trillion now in national debt. We have a $2 trillion plus annual deficit. The spending is not coming under control anytime soon. Defense spending is hitting records as we head towards this global conflict. Social spending and bailouts are likely to expand tremendously when we see how distressed the U.S. consumer has become. And don't forget the banks. The banks are continuing to kind of collapse in slow motion before our eyes, U.S. regional banks, and there's going to be a lot more bailouts there before this is all said and done. So that means that there's going to be a lot more U.S. dollars printed as they pave over these problems or print over these problems in the global economy and in the U.S. economy with this fiat currency. And also, this stuff is in increasingly short supply. The Silver Institute, in their most recent silver survey, revealed that in 2022, we had a massive deficit, about 237 million ounces of silver under supply in 2022. So that means that a lot more silver is getting consumed than is getting produced, both from mining and from recycling. And this is a problem that is brought on by low silver prices. When you see that gold to silver ratio today, it's about 83, means silver is extremely cheap. And when silver is so cheap, there's a lot less incentive for miners to go out there and produce it. You can talk about why silver is cheap. Is it because of public perception? Is it because of manipulation? Doesn't really matter. I mean, the point is this stuff is incredibly undervalued at today's prices. Now, none of this is financial advice. I'm just giving you my thoughts on things. But when it comes to the two metals, I mean, this is really the one I am focused on stacking right now. When it comes to identifying undervalued assets in today's economy, I think silver is one of the most undervalued of them all. And I really do think that there is a historical case to $200 silver or triple digit silver. We may very well see that in our lifetimes. And think about it, if we do get $200 silver, would it really be that drastic of a change? I mean, how many people's lives would really be affected by that? I mean, for one thing, it would trigger a lot more production, so it would take care of the shortages. I know, when I talk about shortages, people leave things in the comments like, oh, there's no silver shortage in my town. I go to the local coin shop and the silver's on the shelf. There's plenty of it. Yeah, well, how much are they charging you for it? Think about that. The premiums, the high premiums. I think these Canadian Maple Leafs these days are getting like a $6, $7, $8 premium over the spot price. And I got to tell you, that is an indication that they're in short supply. Shortage doesn't mean that stuff isn't on the shelves. It just means that you have to pay more for it. In a free market, the way that shortages get addressed is prices go up. Now, if the spot price isn't allowed to rise because all the paper traders are keeping it suppressed, and we see the price of physical metal rising, aka higher premiums, which is exactly what we've been seeing for the past year plus. I mean, there have been ups and downs, but as a rule, premiums today on physical metal are much higher than they were historically. All of this is an indication that there is a short supply of silver relative to the demand, especially physical. Again, that's why we're seeing higher premiums, higher physical silver prices versus paper silver. And when you talk about the impact of $200 silver, again, it's not going to really impact the Apples of the world or the Teslas. I talk a lot about all the unique uses of silver. For high-tech devices, it has the best electrical conductivity, the best reflectivity, the best heat conduction of just about any metal on the periodic table, or any material on the periodic table for that matter. It does get consumed in industry a lot, but in small quantities. So, $200 silver isn't going to affect the price of your smartphone that much because the amount that goes in there is so minuscule. So those manufacturers that need silver to build things, they're going to keep buying it at $200. I mean, yes, stackers will, be pretty happy, I think, if silver hits $200, but beyond that, it really wouldn't impact our daily lives in any significant way. I think the world will just keep, moving along as it has, except maybe silver will get a little more recognition, but it's not the sort of thing that is going to be game changing, and it's not outside of the realm of possibility. That's almost a 10x return from where we're at right now. And for that to happen in the silver market is not that big of a deal because the silver market is such a tiny market. I mean, the gold market, if you were to say a 10x return in gold, I mean, that would mean one of the world's biggest and most liquid markets, that's the gold market, would have to 10x in size. And there may just not be enough, capital out there to drive that kind of a move. But silver is small, and a small inflow of capital into the physical market specifically could really drive massive moves. I mean, if you've been watching the price of silver for any amount of time, you know that when the metals move, silver moves a lot faster. I mean, you can easily have, 7, 8, 9, 10% moves up in a day, even under normal circumstances with silver. And when all of these problems like inflation and the debt crisis and money printing and the bank failures and the potential for global conflict, when all of this really begins to play out, I mean, I think that the demand for silver that we're going to witness is going to be off the charts. And that is when we could see something like $200 silver. And, when we look at those inflation adjusted numbers, just keep in mind that those are, one, they're using the CPI, so they probably understate those levels fairly significantly because the CPI is a bit rigged. It's kind of a cooked number. We've talked about that plenty in previous videos, so I'm not going to get into that too much. But also, that's only accounting for the inflation which has already happened. It's not talking about inflation that is to come. It is to say that in today's dollars, at their current devalued level, if you were to get to the high that silver has already hit in the past, you would need to have $195 silver, $200 silver. And so, if inflation continues, as all signs seem to point towards it increasing, I mean, it doesn't seem like the spending is going to stop anytime soon. And We know that central banks, their plan, anytime there's problems, is to print more currency to paper over the problems. As inflation continues to become a bigger problem moving forward, I mean, you can even move that price target for silver north of $200. And again, this might sound kind of extreme, might sound kind of pie in the sky to some people watching, but remember, there is a historical precedent for silver at those valuations. And right now, I mean, we're looking at essentially a perfect storm for both metals, gold and silver. And in that kind of environment, one would expect, based on the size of the markets and the desirability of these metals, for silver to outpace gold significantly. And that is exactly why historically, when you see the bull markets in the precious metals, the gold to silver ratio comes down, because that's almost always what happens, because silver, moves faster to the upside and to the downside. So leave me a comment down below to let me know what you think about $200 silver. Is that in the cards? Is it just pie in the sky? I always like to hear what you have to say. Thank you very much for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.